Welcome to TradeTheNBI.com. This is John's reports for the 26th. And well, yesterday we had sort of a flat session. Again, waiting for the ABM to even itself. We were getting a little too far from it, and so it kind of paused here as we got closer. Now that it's sort of at its normal level, we're starting to see the beginning of a little bit of a dip here in the shakeup, but we're still well over the plus 15 range. Very healthy in the sense that you have complete reset of short-term buyers. Shorts coming back a little bit with the warning that we had. We had the green coming above. We're starting to see that potential crossover that's just starting. So the fact that we're seeing the bump in here, we could see a little bit later some softening on that. But a lot of good news coming out of, Davos and all of that stuff is, promoting economic growth, and that's exactly what the president sees himself as, a cheerleader. We did get some interesting back and forth about Munchkin and the idea of the euro and dollar trade and how that conflict has started to brew to the forefront now, because we've gotten outside of the range, which I had always talked about, and I had always had people say, well, you can't really say that there was, a set agreement in that. Well, we just had Draghi come out and say that the U.S. is sort of violating their agreement. Well, what agreement? Yeah, central banks agreeing as to what the range of a currency trade are. It's a fix of, where it is, and so that it's moved outside of that is sort of the idea that, no, we're not doing that anymore. We're going to let the market set the price, which really kind of upsets the international balance of things, because in the past, those currency fluctuations that have been controlled were about a form of a trade war. And so allowing free flow of the currency is certainly going to make it difficult for, some of these other countries that have used, the version of quantitative easing to, bolster their economies. It's a problem, especially now with the change in the Fed. I think that we're going to be seeing more of a move towards the inflationary push, which is, I think, why we're seeing commodities rise. We're seeing oil rise. A lot of these are trading because the euro rise. So it's definitely putting some pressure on Europe, who's not thrilled with it because they preferred the constraints. Then here you have the NQ. Much better off, because look at it, you're about to have the steel move above the plus 13.5. You see the oranges move below the plus 13.5 range, and you're about to see the green rising back above the red here as it stalls out. So a little bit more support in the NASDAQ. And there's that euro. It did take a significant plunge on the comments of Trump saying, no, he wants a strong dollar. But I don't think currency traders really are taking his comments over Munchkin and the idea that the dollar is just basically being allowed. How that trade goes, it was funny because Isabella took her little short off this dip, and she got excited when she was up, so she traded out of it, even though looking for a much broader decline would take us all the way back to this 22.8. I think it's just a little premature, because we weren't seeing that with the rising green in that from a daily standpoint. So I told her she'd be able to get back into it again at these higher levels, which it turns out I was correct on that, so it was fun for her. But definitely there's going to be, you got the steel dipping now here. European session, you always tend to get a little bit more support for the euro, then it tends to fade as the U.S. session comes into play. Big rally in the bonds here because of what people were calling it technically oversold. It is oversold to some degree. We just first got the orange dip below, which started to spike that move a little bit. But again, this is really going to come down to how far the oil range goes, as well as some of the other commodities moving. And in this particular case, with a little bit of softening, gold has been a little bit out of whack here. But still, you have cyan well under red. It's still bullish for oil in general. It doesn't mean you're not going to get moves that come back towards that ABM yellow, but still overall higher than they were. And in gold, again, likewise situation there with the, but still very strong. First indications of potential shorter move for gold with the crossover, so we got the warning there along with the steel. Doing a little spider on that cyan is what I call that when it kind of forms the legs, but it's going to present a little bit more weakness to it. But all we've done is we're literally came back to the ABM, which we got way outside of. Sometimes though you'll get 3 or 4 days of it going outside of that before mean reverts back, but in this particular case, came back just a little early. This should actually be similar softness on cryptocurrency, and there it is as well. Because it started up, but again, then you had Theresa May come out and say that they were potentially looking at regulating cryptocurrencies, and so that's brought it back down as well. But there you have it. The initial buy setup came in here with their little 6-7s after the decay, and straight up, just following, and it's actually a little far outside the ABM here, so we'll probably see a little bit of softening before the open session, but this definitely continued. Now we're at 28.50. Before I even started this, we were in 45-ish range. So pretty strong pre-market move, and that's some of the excitement taking place in Europe. Just given the fact that you have a little bit lower liquidity situation in that pre-market, and we often see these positives get filled back in a little bit right as the market opens. It doesn't mean that we still aren't going to move back up to these highs, but this is starting to get to that next threshold, because once we get into the 55 range in that, it's going to be a little more interesting, particularly coming into the end of the month, because strange occurrences are always going to take place towards that closing of the month, especially with the decent gains here. We're probably going to see a little more rotation go back and forth, so that'll be interesting to follow. But overall, it's been some clean readings and bigger volatility, and I think that if we see that volatility increase, it's an indication that we're getting less activity from the Fed in manipulating things, and if we see that with the free float in the dollar and stuff, it's a definite change in overall policy with regard to that, and I believe that it's going to cause us to have some more broader swings, which I think will be healthy. Doesn't mean that the economy isn't good or those kinds of things. The question I really have is, do you really need to pump an infrastructure bill and some of these other things when you have such growth? You're only going to create bottlenecks, but if you're designed to go for a squeeze of labor and higher inflation, then I think that pushing that is definitely letting you know in advance that that's the plan and what to prepare for. So keep that one in mind. As always, though, trade well. We'll talk to you later.